Good morning, traders. Welcome to Price Plan Profit. I'm Melissa. Today is Thursday, June 19th. I wanted to do a morning watch list breakdown, even though the U.S. equity markets are closed today to celebrate Juneteenth. I still wanted to provide my typical Thursday video where I go through a morning watch list, narrowing down my focus to three names and giving you the setups. Well, today, because the equity markets are closed, I decided just to focus on the future markets, and that would be the ES and NQ futures. I want to show you step by step how I create a trade plan. Regardless of the ticker, the process is the same over and over. So, what I like to do for my intraday trades is to focus on target zones using the 2-hour chart here, and then I want to find the inside and up and inside and down candle formations as my targets to the upside and to the downside. Here on ES, if I look at where price is at, go up and to the left, I can see that yesterday on Wednesday, we created an inside and down candle structure here on the 2-hour chart. So for today, if I were trading futures, this would be my target zone to the upside for a day trade. Now, I also need to know where that target zone is to the downside as well. So I'm just going to look down and to the left now and find that inside and up candle formation that is below where price is currently at. I'm going to draw a zone around it and color it green just for visual purposes. I like to have my upside targets red and my downside targets green. So I have now my target to the upside for today, my target to the downside for today. There's a lot of room in between here, and I do like to scale in and scale out of positions. So, what I like to do is use a combination of trendy edges, these lines that you see on my chart, as well as Fibonacci. So if I take the most recent up move, I can see that started here and measure that up to the high. Now, any line that is above where price is currently at, I want to take those off of my charts because I will do a secondary Fibonacci to find those scale targets to the upside, not using these Fibonacci levels. So I'm going to go ahead and leave the 618 on, although price is currently just below it. It is an important, very important Fibonacci level. The rest of the levels above price, though, the 50, the 382, and the 236, I'm going to take off like that. So that's giving me some downside areas that I can trim or move my stops on the way to the final target down here. Now, just like, give me 1 second. Sorry about that. Just like I used Fibonacci's to measure this uptrend, I also want to use Fibonacci's to measure the downtrend. And the current downtrend began here, and I measured down to the low. That will give me some trim targets on the way up to my ultimate target. Now, any lines that are above my ultimate target, I'm going to remove those because I'm using these levels to trim on the way up to that final target. I don't need to have all of the excess levels on there. Now I want to zoom in closer to price and look at where my trim levels are at, where my ultimate targets, both to the upside and the downside, are at, and I want to see if they're reasonable. So, for instance, if I consider the daily ATR right now on ES, it's 84 points. I have a little banner here on my daily chart that I can see that. So 84 points. Price is currently, let's just say, at 6,000. Is this a reasonable target to the downside? And I can see that it is. It's about 55 points below. Now, understand today will have lower volume than normal, but this is still a reasonable target to the downside, as is this a reasonable target to the upside. And basically, price right now is just in the middle of these two targets. So, if I were wanting to play a reversal of the current downtrend that ES is in, I can use these levels as an entry if I choose. What I like to use is the PMZ indicator, that is a proprietary indicator from the Trendy Trading Room, and it gives me a trigger long and a trigger short. Above the PMZ high is trigger long, below the PMZ low is trigger short. That's going to line up somewhere, let's just say 6005 to 6,000. So below 6,000 would be that trigger short level, and above 6,005 would be the trigger long. So that's how I would play the futures, going long above 6,005 and trimming here at 21, 37, 50, and ultimately targeting 56 by 73. For the downside below 6,000, I'm wanting to go short, trimming at 82, 59.82, 59.62, and ultimately targeting 54 by 27. So that's how I would play the futures for day trading today. Now I want to take a look at the NASDAQ, and I'm going to do the same exact process. So I'm looking at a 2-hour chart. I'm looking for that inside and down candle formation that was formed yesterday when the market pulled back, creating a zone for me to target for the upside on day trades today. And I'm going to color that red. And then I'm going to do the same for the downside target. I want to look down. I want to look to the left. I can see I have 1 and 2, two inside and up candle formations down here. That would give me my downside target. Now I'm going to run Fibonacci's the same way I did for the ES to find those trim areas or areas to move stops along the way to my final target for today. So if I take this current, most recent uptrend, and I delete the ones, the Fibonacci levels off that are above the price right now, that will give me some trim targets. I'm going to go ahead and remove that 887 because it's right at my zone. And then I want to take the most recent downtrend and do the same thing. That gives me trim targets for the upside. And I'm going to keep the 236, the 382, and the 50 and remove the rest because they are not relevant for trim targets. Now, looking at this chart overall, of course, I want to know, are my targets reasonable? I'd use a daily ATR of 367 points on the NAS. Price is currently right at 21,800. Subtract 350, 360, somewhere 350 to 400, and I can see that downside target is reasonable, and then do the same thing for the upside target, and I can see that that would also fall in line with the daily ATR. So now I have a trade plan for NQ as well. I can come down, look at where the PMZ is currently setting up, basically 805 to 797 there. So above 805 would be a trigger long, trimming at 886, 950. Then let's just say 220,000 and ultimately targeting the red zone that you see here. Then below that trigger short of 97, 797, I should say, that would be a trigger short. You do have the 61A and this trendy edge right there. What I would do in this case is wait for it to break down below these edges, then go short, looking for trimming at 21,680 and then ultimately targeting 21,598 by 21,471. And that gives me trade plans to trade ES and NQ futures today. Now, I don't typically trade futures, but this process is the same process I use every morning to create my trade plan on my chart. I know where I'm going to enter. I base that off of the PMZ, or I base that off of my buy and sell zones. So going long if price were down here and going short if price were up here. I do that every single day so that I have a trade plan, knowing my entries, knowing all of my targets, and then of course knowing my stops. Now, for ES, a typical stop for me trading ES futures is 5 points using a 5 point stop. And trading NQ, that would be I'm okay with 15 to 20 points as my stop for day trades. So, yeah, that's the trade plans I would have today for the S&P 500 and the Nasdaq futures. I will be back next Thursday to do another morning watch list review, and I can show you equity tickers that I will be focusing on for that day. I hope you have a wonderful Thursday, and I look forward to seeing you in the next video.